only have $100 a month to invest in Bitcoin, I think this video is going to be for you. As I start to show these different slides, I have a lot to show, and it's a follow up on yesterday's videos. I have a lot of friends that say, I'd like to invest in Bitcoin, but I just don't have enough money. And with the economic conditions and inflation, and yesterday with the Fed basically putting a pause to QT, we're going to see, I think, inflation roar coming in 2026. However, I do think $100 a month into Bitcoin or SMP, this one's going to focus more on Bitcoin, since I think Ben Cowan does a lot more charts dedicated to this asset class. So I'm going to walk through some of the strategies that Ben talks about. Is you can DCA in $100 a month, or what you could do is what he calls dynamic DCA into the market. So with the dynamic, you're using his wristbands, but it also lines up pretty nicely with the cycles. As I'm making this content, it makes sense to watch each video before the next one because it kind of builds upon the ideas of the past video. So you've probably already seen this risk metrics, but I want you to focus on like January, 2020, because we're going to do a 5 year, almost a 5 years, well, 6 years DCAing in strategy where you're going to look at putting $100 a month from about here all the way to right now, kind of where we're at. So let's just say January of 2026. So we're about 2 months short of 6 years. So if you do that, you can use the risk levels and just DCA in every month, $400, every 4 months. If you did $100 a month, that's 1,200 every year. So that's, I think, really manageable for a lot of people, especially those that want to just get their toes, dip their toes into this asset class. So the other thing too that Cowan talks about, and this video is about 5 years old, and I really wish I could, and maybe I'll post the video below, is this is really what's going to set us up for the DCAing scenarios. And I like this chart because it's a visual. As you can see, Ben's head's right there. But essentially, this is where you're buying is the green and where you're selling is the red. So assuming that you are buying at X, so X is between the zero 0.4 and the 0.5 wristband, which we'll take a look at here in a minute. But typically, this is kind of where Bitcoin likes to hang out. And I would even say all the way up to the 0.6. So for my strategy, I always go up to the 0.6, right? So let's say you're doing $100 here just on the 0.5, just to keep it simple. If it drops to the second wristband, it'd be 2x. So if you take $100 times two, that'd be $200. And just for simple math, if it drops all the way down to here, which I don't think it did. I mean, it kind of touched down here, during the COVID crash, but you would be able to do 5 times. So that'd be $500 just while it's in that risk metric. So let's say it dips down here and it is, 0.08. And then the next month it booms back up here to 0.02, right? It's between these two wristbands. You would actually not do a 5x, you would just do a 3x. And then what he says on the flip side is you sell a little bit of your Bitcoin as we go up to take profit. So here, if you would have been buying the COVID dip, went all the way up to the 0.6, even the 0.5, let's say you sell, it could be, it could be a fifth of what you have, right? He calculates the Bitcoins for Y as far as how much you would sell. But to me, I always like to kind of wait to the 0.7, 0.8. I'll show you here another chart. So it's completely up to you. But just imagine throwing $100 into crypto for 6 years for once a month, but also then changing that mindset to say, okay, I'm not going to invest all the time because as you're up into these peaks, you're not really going to be investing in Bitcoin. You're going to be taking profit, right? I like this one because this is more of a similar one that a lot of people use is they wait for these low buys. So let's say this is their X. They might be able to do a little bit more too, right? Because as you're putting the money into the bank account or buying other assets, you're essentially having a waiting game for Bitcoin to kind of come down to these levels, and then you sell them as they go up, right? This is a chart. I think this is right after, I think it's 5 years old. So it must be from 2020, 2021. But I'll kind of show the other risk metrics here in a little bit to kind of give you the full picture of where the last 5 years of data went. He does these videos every once in a while, but to me, when I saw this video, I was like, it finally clicks. Like I don't have to be chasing the tops, right? As I talked about in my first crypto run, but I can wait and comfortably say I can put aside $100 a month. This one is essentially what I tend to do is I go up to the zero point 0.6 risk metrics, and then I'll sell on the 0.7, 0.8, 0.9, and the YOLO. No, we really haven't really kind of seen that 0.9 to 0.1 or 1 just due to diminishing returns, right? So 2018, we got up to the 0.9. We peaked it in 2013, but we really haven't seen it hit these type of low levels, and I'll show that in a minute. So this is what I do. I just keep it simple. And the beautiful thing about this, like let's say it does hit that 0.6, you can sell it, you know. So in this case, it does hit that benchmark. So maybe you sell here, you can then reaccumulate down lower, right? So you can DCA back into the market. So you're constantly like selling, but also accumulating based on your risk metrics. So that's really what I wanted to kind of show on this PowerPoint. Very simple. But now I'm going to switch gears a little bit, and I'm going to show you some DCA strategies that might be of interest to you, because I think that's also important. So again, I can't say this enough. These risk metrics, almost really a perfect bell curve, right? So you can go all the way up to the 0.6. In fact, if you look at percentages, let's just change that to percentages. If you factor out, this is, let's say, 6.5, that's 2.5, so that's 9%. Let's say 1%, 1.5%, so that's 10.5%, and the YOLO. So let's just give it like 11% that is in these wristbands. 11% of Bitcoin's life is spent in the 0.6 to 0.6 to the 1, right? To me, that is a drastic change versus accumulating lower. And that's why I go all the way up to the 0.6, because I want to have that 18% exposure, right? I think that that's a pretty good place to kind of DCA into the market. So let's look at some simulations, right? So let's say you're doing Bitcoin, $100 monthly, first day of the month, right? So whatever it is, we're gonna go from 2021. Sorry, I put 2020, but you would have missed the COVID crash, but that's okay. So 5 years instead of 6, so I apologize. And then the ending date would have been, let's do 2025. Let's do it this year. So we'll have to change that date. We won't compare assets. So if you were to do that, let me make sure I did that correctly. Okay, so you would have invested, and again, this is just $100 a month, like not even thinking about it, right? So you're not dynamically DCing and you're just throwing it in. Here's your cost basis, right? Invested, but here's your net worth. So you really wouldn't be profitable until like July of 2023. Like it would be almost break even, which isn't bad. But you would have had invested $5,800 or $5,800. Your portfolio would be worth $17,000. So not bad. I mean, that's a 12% gain in the course of 5 years. If you were switched to a dynamic DCA, let's say you would do a lump sum. Sorry, let's do lump sum first. Starting in 2021, right? Same date, January 1st, your account would be worth 18,000, right? So I mean that's a lot more, not a lot more, but about $1,400 more by just throwing in 5,000, right? If you dynamically DCA into the system, and again, I need to change these dates. No, I think I got that right. So I did this correctly. So if you would just kind of use the dynamic DCA in where you're only going up to the 0.7 risk metric, where you're buying $100, but then if it drops, let's say to the 2x, you're going to do 200 and vice versa. So you're constantly increasing the buys that you're going to have. So you have $15,000 invested versus 5,000. So you have 10,000 of roughly a little less than 10,000 more. But look at this returns, right? I mean, your portfolio is up a lot of money compared to the 11,000. If you do more of a conservative, right, 5.6 or zero point 0.5 to a zero point 0.6, it's going to be less, but you're also investing a lot less money in a lot less months. I mean, you're missing out of, what is that? 9 months that you're not buying versus the other one, you're almost investing every month, whether it's $100, or as you go down, right, the time in the wristband, for that scenario, you would be doing 200, 300, 400, 500, 600. But it really never kind of gets down to these lower risk metrics, at least in those areas. So really, you're kind of maybe spending 100 to $300, but the returns are right 39 grand or 256%, 285%. So not much difference, right? If you're going from a point 0.6 to a point 0.7, but again, we're talking about $100 a month here, right? So, lump sum, some people prefer that is just to kind of throw the money into it and take the return, which isn't bad. I mean, in this case, it probably would have been comparable, but those that don't have the $5,000 is the other consideration. And then the DCAing in might be your better strategy, right? Let's just say you're buying all 58 months, you're going to invest $5,800 and walk away with a 201%, right? I mean, what asset class is going to give you kind of that kind of money? But again, I still think going up to the um, point 0.6, point 0.7 is your best strategy. I go up to the point 0.6 because again, with the risk metrics, that's where it kind of goes in. As far as I'm only missing out then of 13% of the 13% of the time that Bitcoin's in the point 0.7 to the point 0.1. Okay. I just want to shoot this quick video, just kind of show you the power of DCAing into the market. I do think that this is a really good system, especially given the volatility of crypto. I'm to the point now that I almost have no crypto left. I mean, I have my Ethereum and I have a small bag of alts, but my Bitcoin is gone because I was DCAing in at $16,000 at the bottom of 2022. So I don't really have much left. And to me, people will switch, right? As Bitcoin goes up, other asset classes drop the dominance. I mean, we're at 60% dominance, so they'll rotate it to like Ethereum, catch the pop in Ethereum and rotate it back. I might start doing that because I'm at the point where I'm starting to build a nest egg for retirement. But again, this system, $100 a month, really kind of keeps me on the right side of the trade. No matter if you lump sum, do $100 a month, or use my system where you DCA in all the way up to a 0.6 on the risk metrics. Thanks for watching. Please subscribe. I like doing these videos, and even if it's just me talking to myself, it's cool that I'm just putting out content, and I'm really enjoying this. So thank you for everyone for your support, and I'll see you on the next video.